Breaking news, Federal Reserve minutes hit the market and Bitcoin faces a sudden drop from 52,500 to 50,625 in 24 hours. Stay tuned as we dissect the crucial developments unfolding, revealing the impact of the Federal Reserve on the current state of Bitcoin. Don't forget to subscribe, like, and share, and let's start. And we're starting off with some great stuff first of all, and then we'll go to the crash that US Federal Reserve tries to settle now. How to find a guaranteed 100x in crypto. As we're getting closer and closer to the bull run, this is the most informative thing that you will hear. This is the smart way. You need to know this for the Bitcoin bull run. You probably always keep the metric, but it literally takes less than 2 minutes. Let me explain. As you will look at the FDV of the project, it stands for fully diluted market cap. Don't be lazy, it is simple. This allows you to check potential market cap, as it multiplies the token's value by the total token supply, and you're simply predicting the crypto's potential market cap. First, go to coin market cap, search for your coin, then look at its FDV, so the fully diluted market cap and market cap as well. Now here's the real secret. Look for projects with a relatively large gap between market cap and FDV. Why? A substantial gap means significant room for growth when all tokens are in circulation. This will pinpoint projects with genuine potential, and let me break it down with an example. Market cap is $100 million and the fully diluted market cap is at $500 million. The project has a good chance of success if FDV is significantly higher than the present market capitalization. Those are the ones that could deliver 100x returns. Large valuations means opportunities, and basically that's kind of it. It's not just the only metrics that you should look at, but this is a really important metric that you should barely check out sometimes. Next up, new world's largest asset manager BlackRock to hold an institutional digital asset summit tomorrow. A lot of big news will be tomorrow with the BlackRock, and let's see what they are prepared for us. Just in, an argument about the Bitcoin breaks out on CNBC just now. They are speculating on the Bitcoin as it continues on hyping up even more and more people starting to find out about the growth that is about to happen. It is really happening, my dear Bitcoin plebs. See you tomorrow. This is only the beginning for us. As just in, BlackRock is hosting the Institutional Digital Asset Summit tomorrow. Their Bitcoin ETF is the biggest performing ETF in 2024 and their only listed digital asset product. It's basically going to be a Bitcoin sales conference for institutions. Billionaire hedge fund CEO Dan Morehead bringing DeFi to Bitcoin is now a $500 billion opportunity. The king is back. Bitcoin has been consolidating again for about a week after a huge pump, and people are going crazy again for a 3% pump and dump. People never learn. Smart Bitcoin investors are leaving in droves. This began not with GBTC sales or during the ETF launch, but months before that in October 2023 at prices like 28k. The fish, which are addresses that hold between 10 and 100 Bitcoin, have accurately risen sharply at local lows and declined near highs, showing that they are the smart investors. From the cycle lows of 16 to 18,000, these address bands increased rapidly. And now, even with all this supposed this time is different talk, they are leaving. Smart investors say this is not the time to enter Bitcoin and hasn't been for quite some time. Lower prices may bring their return. The next one we go. Federal Reserve minutes shake up crypto market. As the eagerly awaited Federal Reserve minutes were released, and this event topped today's key agenda items, we talk about the important developments of the week every Sunday. And in the last one, we discussed how critical today was. The expected increase in volatility was not in vain, and Bitcoin fell from 52,500 level to $50,625 in the last 24 hours. As the Federal Reserve minutes and cryptocurrencies. As expected, the Federal Reserve minutes caused fluctuations in the cryptocurrency markets, especially altcoins experienced a drop of around 7%, while some saw double-digit losses. Bitcoin itself suffered a loss of about 2,000, and in the last Federal Reserve meeting, Powell stated that they would not rush interest rate cuts, and that is highly unlikely there will be a reduction in the March meeting. Above you see the interest rate outlook after the minutes were released, and the markets had been significantly shaken by the latest employment and inflation data, but had recovery with ETF entries. Now they will price in the Federal Reserve minutes, as the details of the minutes are as follows. Federal Reserve minutes released. So, Federal Reserve minutes, a few policy makers pointed to the downside risk of maintaining an overly restrictive stance for too long. Federal Reserve minutes. Federal Reserve officials believe the policy interest rate is likely at its peak for this cycle, and Federal Reserve minutes, most Fed policymakers highlighted the risks of easing too quickly, emphasizing the importance of incoming data to decide whether the inflation is sustainably moving towards 2%. Some officials noted that the progress on inflation could stall. Policymakers generally did not find it appropriate to lower interest rates until gaining more confidence that inflation is sustainably moving towards 2%. Many policymakers emphasized the importance of clear communication about the data-dependent approach, as several officials mentioned that a balance sheet reduction could continue after interest rate cuts begin. The overall economic outlook was slightly stronger than the December projection, as officials highlighted the uncertainty about how long the restrictive policy stance would last. Federal Reserve officials think risks to economic forecasts are to the downside, as Federal Reserve officials weighted the possibility that more progress in reducing inflation could take longer than expected, and some policymakers said slowing the pace of balance sheet reducing could help a smooth transition to an adequate level of reserves and allow balance sheet reduction to continue longer. With a delay in Fed rate cuts looming, will crypto see block in a bull run? Crypto markets have always been sensitive towards macroeconomic factors, as current data in the US that indicated a resilient economy, which has pushed speculations around the delay in the Fed's rate cuts. Market participants have now started questioning the future trajectory of crypto markets as jitters from the sturdy US economy loom larger. US economy shows resilience. In an interview with Yahoo Finance, Yardeni Research Inc. Yardeni says that the US economy is remarkably resilient at the moment, as the remarks follow economic data released in February showing that most indicative data points came in harder than expected. Previously, wholesale inflation saw a rebound in January, as according to the US PPI inflation statistics. Month over month, the PPI index rose by 0.3% in January, as this was higher than the anticipated number of 0.1%, as market players closely monitor the PPI inflation statistics as measure of wholesale inflation as an indicator of pricing. And in addition to the same tone, the consumer price index data showed that inflation came in at 3.1% in January. An economist polled by Reuters had expected consumer inflation to rise 2.9% annually in January, and after 3.4% growth in December, crypto markets were also impacted by the report, as the Bitcoin price took a fall after the US CPI data was released. And both the PPI and CPI reports are especially important to the Federal Reserve, as they indicate the inflation status which Fed has been trying to control for long now. That's all the information we got on today's video, and if you're interested in more, don't forget to subscribe, like, and share. See you in the next one, and peace.